Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
M&A trade today, M&A Monday. We haven't had too many deals this year, but we had one in the finance business. Rocket Mortgage to buy mortgage firm Mr. Cooper in a $9.4 billion deal, all-stock deal. Again, the first thing you know me, what I do is I go to MA Go and see who's getting paid here. JP Morgan advising the acquirer here, Rocket, and Citi advising the target, Mr. Cooper. So everybody's getting paid there. I worked at both of those firms, so both of those folks getting paid. All right, but let's talk about what's going on here. Paige Smith joins us, consumer finance reporter for Bloomberg News. Paige, talk to us about this deal. Mortgage, Rocket Mortgage I've heard of. I've never heard of Mr. Cooper. Who are they?
So, thanks for having me. Mr. Cooper is best known, I would say, in the mortgage servicing side of things. Okay. So it's sort of after the fact you've got your mortgage, but who are you actually interacting with, years down the line? It's actually going to be Mr. Cooper. But this is a big deal for Rocket because they've been trying to position themselves as sort of a one-stop shop for consumers' finance offerings. So think credit cards in addition to your mortgage and, now theoretically your mortgage servicing rights. So it's a pretty big deal for this company based in Detroit. Dan Gilbert, a pretty prominent person in the finance. Yep, pretty big in sports as well. But $9.4 billion, it's a big deal for these folks.
And earlier this month, we have Rocket also striking a deal to acquire Redfin, which is a real estate brokerage. How will that build into this one, or if they're even connected at all?
Certainly, it is basically sort of from a nose to toe, if you will, of the home buying experience. Everything will sort of be under this Rocket umbrella. Mm-hmm. Redfin, as I think a lot of folks know quite well, is this platform for buying and selling homes, and it would be sort of a starting point for the home buying journey. Rocket is well known for originating or creating mortgages, and now Mr. Cooper is well known for sort of the servicing of mortgages. So it is kind of from start to finish of the home buying process, theoretically.
They got a lot of debt on their balance sheet because being a former banker, I don't look at stock market values. I look at enterprise value to include the debt. It's $18.5 billion because that's what you get paid on. You get paid on enterprise value. So that is a big number there. Talk to us about the mortgage business. I mean, it doesn't seem like there's a lot of deals happening in the business.
Well, I mean, I think we can look at interest rates. It's been certainly been a tough time for home buyers and sellers, and that also weighs on these home lenders. It's a tough time for folks who kind of have put their eggs all in one basket, which is the home lending business, but that's kind of what Rocket has been aiming to do, is to really branch out and diversify their business so they're not so interest rate reliant or exposed, rather, which they have been in the past. And frankly, that's showed up in their earnings over the past couple of years. So I chatted with CEO Varun Krishna over the summer, actually. We did kind of a deeper dive into Rocket and the company. And one thing that he told me then was that artificial intelligence is actually a big bet they're making to really try to boost the business and make that home buying process truly as smooth as possible for the customers, to kind of amp up their offerings. And we'll see how it works out for them in the end. But so far, the numbers look pretty good.
Was this deal expected? Were you hearing chatter before, or did it completely shock you?
I was not hearing chatter before, and it seems like the market is responding in kind of an interesting way. But we're going to continue to follow the story and see how this kind of fits into the broader Rocket story.
Who do they compete against? Do they compete against the banks that make the loans, or the banks that make the loans usually just syndicate them away, right?
Well, I kind of take a different take on that. Okay. Since I cover consumer and finance kind of broadly, I think of folks who are kind of trying to be that one-stop shop for the consumer finance experience. So for me, I think of, SoFi Technologies, for example. That is like they have a lot of lending opportunities for consumers, but they do a heck of a lot of other business as well. Robinhood, even coming at it from the investing side of things, now offering banking products for folks. That's kind of how I think about it in terms of competitors. But that's just from a fintech consumer finance perspective. When it comes to home lenders, other big folks in the space, I was just looking at some data by Inside Mortgage Finance that placed United Wholesale Mortgage as number 1, PennyMac as number 2, and Rocket as number 3.
PennyMac is what I use.
PennyMac, interesting.
That rings a bell. Okay. Dan Gilbert, just for what it's worth, kids, on the rich top list of Bloomberg, all the wealthy people, he comes in at number 62.
That's not bad.
Net worth of $28.7 billion, up $2.6 billion year to date.
Yeah, he's a force in Detroit, I would say. Some of our colleagues out of the Detroit Bureau did a great story on him last year, if you're interested, on the terminal. David Welch, shout out.
All right, Paige, thank you so much. Appreciate it. Paige Smith, a consumer finance reporter, Bloomberg News, joining us in our studio here, talking about Rocket Mortgage buying mortgage firm Mr. Cooper, $9.4 billion deal. So make more consolidation in that processing business of the mortgage business.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
As we were talking about all morning, gold hitting another high today, up another $36. That's 1.1%, 3,120. I don't know. Maybe Mike McGlone's got some thoughts here. Mike McGlone, he's Bloomberg Intelligence Senior Commodity Strategist. He's down there in Miami Beach. Of course he is. Mike, now it just seems kind of silly here. I mean, just every day we're up 1%. It can't just be the Chinese banks and Chinese consumers hoarding all this stuff. What's going on out there?
Now I think we have gold trading basically as a put with the S&P 500, but it's almost 1-to-1. S&P 500 is down about 1% today, and gold's up about 1% today. So the bull is getting food, and the bull does need food. Gold is stretched above $3,000 an ounce. I think that's now a support level, but it's doing what it should do in an environment. We have a very extended U.S. stock market going back downward. At the same time, it's taking the dollar with it, which has been usually odd. We're kind of risk off, yet the dollar's going down. It's because the dollar's so expensive too. So still very bullish gold, but I think you have to remember what it's doing now. What's a key thing is we've had 4 years of outflows in ETFs. Now they're starting to turn to inflows. At the same time, we see Bitcoin peaking. So it looks like it's big pictures reversion just getting started. I'm still bullish gold, but it's somewhat dependent on that stock market going down at these levels.
It is hard to ignore gold ETFs, Mike. I mean, we've seen February and March, both months, they took in $12 billion. That's the most since at least 5 years. So investors are really plowing into that. But recent buyers are also buying bars, coins, and ETFs. So I think it's maybe the multiple avenues that they can express their views on gold.
Yeah, so I think what you're seeing is we saw central banks are still buying, but they've been really big buyers the last few years. And at the same time, with the stock market on a tear and high interest rates, ETF investors, most notably in the U.S. and Western countries, were just selling, say, sorry, I don't need the rock. But now they're starting to realize the rock is really outperforming. It's almost 4 years now, 1, 2, 3, and 4 years now. It's beating the stock market. And performance is starting to win. It's also seen that what they were told about digital gold, Bitcoin, it was better than gold, is finding out this. Bitcoin's down about 30% with the S&P 5 correcting about 10%. It's proving it's a leveraged beta. At the same time, gold's up while the stock market's going down. So they're seeing that diversification and shift over. The question is, what stops it? And if we look at people like Anna Wong and Gina Martin Adams, they still think the U.S. stock market can go lower with U.S. GDP and U.S. economic growth, and that's very bullish for gold, long bonds, and bad for the stock market.
So, again, there's no PE ratio to look at here, Mike, for an investor to say, oh, boy, this is historically expensive here. We need to get out of a certain commodity. How do you kind of talk to clients about, I guess, just relative value?
Well, one of my favorite ways to look at gold, Paul, is the way what I published this morning. You take the price of gold in ounces, divide by the S&P 500, and it's just bumping up above 0.5, meaning you need 2 S&P 500s for 1 gold. And the last key times it did that was in 1972 on the way up, big rally. Remember that one? I was very young. And 2007 on the way up. And now it's starting to break up higher. At the same time, the stock market's dropping from 2 times market cap to GDP. I mean, that hasn't happened in the U.S. since the 1930s. It's happened in Japan in the 90s. It's happened in China just a few years ago. So that crocodile jaw pattern is just starting to narrow. And I'm worried this is going to keep narrowing. That means gold outperforming most assets as the stock market just reverts to more normal levels.
I'm going to resist bringing in Bitcoin here since I also write Bitcoin and I know you write Bitcoin too. But let's talk about copper. Can copper beat gold in a year of unprecedented austerity and tariffs and China increasingly relying on stimulus?
Well, I love the question because you know my answer as the question's leading. I'm glad you brought that up. So my outlook for this month, I think copper's more likely to go to 4. Partly because I'm an ex-trader. I used to have here. I knew I probably would have been stopped out trying to short it. But now, last week, it made a new high. U.S. copper price peaked at $5.37 down, $5.37 a pound. Last year's high was $5.20, and then it dropped to 4. But the reason it went up is for odd reasons. Okay, it's expecting tariffs. We haven't had the tariffs, and it's fully priced them in. So what copper usually does, it goes down because it goes up. And I think if we see further weakness in the U.S. stock market, I think copper is much more likely to drop towards 4. It's very unlikely to get to 6. And that's what normally happens. If it continues higher from here, it's very discombobulating, and it's really is counter to some of the major goals of President Trump. That's onshoring productivity, onshoring markets and production, and lower inflation and lower yields.
Hey, Mike, you're from the Farm Belt. How's the U.S. farmer doing these days?
They're having a rough time, most notably because of lower prices. The key thing I learned from farmers when I go out there, the all-day ag outlook, and I'll be out there next month, is the quote from Mark Twain that they don't make land anymore, I should buy some. And the quote is, well, they are in Brazil. Massive supply of soybeans out of Brazil. That's the key thing. It's a reaction to the big pump in prices, technology bringing them on, better infrastructure. Brazil now exports double the soybeans the U.S. does. And the U.S. has been about the same for 10 years. 10 years ago, they exported a lot less. So that supply is being met. Prices are heading lower. You basically need a U.S. drought for U.S. grain prices to go up this year.
All right, tough one there. Mike McGlone, thanks so much for joining us. Always appreciate getting some time from you. We can talk about anything from metals to precious to base metals to the softs and oil and all that kind of stuff. So Mike covers it all. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, we got him. Shawn Donnan, he's down in D.C. He joins us right now, senior economics writer. Shawn, you're in D.C. You have to have some scoop for us, man. What's going to happen? What's the president going to do on Wednesday with these tariffs?
Well, look, the scoop this week is less about what we're going to get on Wednesday, and I think really thinking about the direction. And I think that's what the markets have been thinking about more and more in the last couple of weeks. And the details of exactly what we're going to get on Wednesday when the president steps up to the microphone and announces these reciprocal tariffs and proclaims Liberation Day for the U.S. economy are still being worked out. And we heard that over the weekend. We heard Kevin Hassett, the head of the National Economic Council, saying he didn't know. He didn't have any forward guidance to offer as to what was coming. He just said he trusts the president to decide to do the right thing. Now, what that right thing is, we don't know. But look, the reality is the direction is a kind of known here, despite all this uncertainty, and that is that Donald Trump is going to impose more tariffs, and then after that, there's going to come some more tariffs. And really, we are seeing the erection of a tariff wall around the U.S. economy. And we just don't know yet exactly how high that wall is, but we are seeing a real structural change in economic policy, and that is what Donald Trump has been promising, not just during last year's campaign, but going back to 2015. And here we are. This week, we're going to see his biggest attempt at that so far.
I was reading about this over the weekend, and we have some reporting that Trump prefers a, quote, big and simple tariff plan, suggesting no expectations, or expectations could be hard to come by. What does that mean for everyone?
Well, it means that Donald Trump likes big round numbers, and we've seen that going back to his first term when he was urging his aides to scale up tariffs rather than tone down tariffs when he was applying them on Chinese goods. And I think we can expect the same thing to happen this time around. Just over the weekend, we saw this again when, previously Scott Bessent, the Treasury Secretary, had talked about a dirty 15, signaling that perhaps collapse. They were going to limit the tariffs to the 15 worst offenders when it came to the U.S. trade deficit. And Donald Trump last night aboard Air Force One came back and said, no, it's going to apply to all countries. So he wants something simple. He wants something that he can sell to his base, but he also wants something that can be transformational in his mind for the U.S. economy. He sees this as a chance to put his stamp on U.S. economic history and in some ways repair the bad name that tariffs have had for decades and decades.
Shawn, what do we know about retaliation from some of our biggest trading partners these days?
Well, we know it's going to come. That's what happens. The Canadians have talked about it. The European Union have talked about it. We've already seen retaliation from China. And that's where a lot of the economic damage will come as well, of course. You can model the direct impact of reciprocal tariffs, and our folks at Bloomberg Economics have modeled what they call a maximalist scenario, which would take 4% off U.S. GDP over the next 2 to 3 years, but that doesn't account for retaliation. It doesn't account for what happens to business investment when you have global trade wars that kind of batter everyone and throw a huge amount of uncertainty into the mix.
Come Wednesday, what is the one thing or two things that you're going to rush to look at, or the thing that has been the most ambiguous and now you're looking for certainty, if we get certainty on Wednesday?
So the thing I'm really looking for is what comes next, right? We're expecting tariffs to be announced that will take effect April 3rd. The president has already said that auto tariffs will go into effect April 3rd. So I'll look at what other tariffs will go into immediate effect, but also the sorts of investigations that he is going to launch. He has talked about other sectoral tariffs on everything from semiconductors to copper. All of those are probably going to involve investigations that are going to be launched under certain trade authorities. And, that's the tariffs that will come after what we get on Wednesday.
All right, Shawn, thank you so much. Really appreciate it. I'm sure we're going to be talking to you quite often in the coming days. Shawn Donnan, he's a senior economics writer for Bloomberg News. He's based down there in Washington, D.C.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.